All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options midweek update. I did want to jump on, walk you through what we're seeing here in some of the key markets that we track. It's been a very challenging stretch here, just with so many unknowns on the news side of things. Coming, we've got all of the rumors of a new stimulus deal being announced. And now, to add to it, we are going into the heart of earnings season over the next few weeks. Netflix was the big kickoff for the tech sector last night. It is actually selling off here today, and we'll see if that's a precursor to what we're going to get over the next few weeks with a lot of the big names like Facebook and Apple, Amazon, Google. We've got a lot of big announcements upcoming, big market moving events that we'll need to pay attention to. So we'll talk through all of that. I'll also walk you through some trades that I'm looking at for the next few days as well. Now, a couple things to talk about before we get over to the charts. I mentioned the news cycle. We've talked about this the last number of times that we've come on for our live updates. In a news-driven environment like we're in now, the problem becomes you don't know when the headlines are going to hit. And in today's world of social media, these tweets can come out from any of the politicians, from any of the economic leaders, and the market is so focused on what they're going to do to prop the markets up that you get these instant reactions. And within a 60-second stretch, I mean, you can see some pretty amazing moves in both directions. The tricky part there, it's not like an economic number where you know ahead of time that it's coming out Wednesday at 8:30 Eastern time. These aren't announced ahead of time. They can just come out at any point, and that makes it incredibly challenging. It doesn't mean we can't be active. We certainly can. What I've been doing, what I've been talking about in these sessions is be cautious. Cut back on position size if possible. I've been trading a lot of my personal positions with around 50 to 75% of my normal position size. I'm cutting back there. I've also been using a ton of vertical spreads lately as well, just due to the current nature of this market. I don't think this is the market that you want to get aggressive in and just go in and throw everything you've got at long calls, long puts. You want to be more conservative just in case, we get that surprise announcement or that surprise news event, and all of a sudden you get an instant reversal against you. Be conservative here. There will be a time in the next couple of months where the market's going to give us the green light to get more aggressive, right? When I say more aggressive, I'm talking potential bigger position sizes, more weekly options, more straight long calls, long puts versus vertical spreads. And the benefit of being an options trader is you have the flexibility to use different strategies to react to different types of markets. We're not just focused on, looking for those big moves up and down in the market. They're great when they happen, but we can use those vertical spreads to be active and be more conservative if the market, is a little bit more challenging like we're in now. So highly encourage you, if you are not currently using vertical spreads, you will absolutely want to add them to the mix as soon as possible. They're just going to give you way more flexibility in this wild environment that we're in these days. Now, I mentioned last week a couple of tools that I use. I had some questions on these, so I wanted to review them one more time. The economic numbers, they are planned ahead of time. If you go to forexfactory.com, there's a lot of sites out there like this that offer free tools. I don't trade the Forex markets. I just like to use their economic calendar. And it'll list what news events are coming out that day along with a color code. And that color code is going to be either yellow, orange, or red, depending on what type of impact that event has had on the market previously. I'm typically looking for the red and orange rated releases because those are the ones that can have some instant impact on the markets. Forex Factory, you can see it for the day. You can also switch it here to show the full week. So let's go ahead and switch it here. So you can see as I scroll down, you will see that it'll list all of the news events for each day of the week. Okay, it's a pretty useful tool. Again, I'm only looking for the US dollar, the US related releases there. Those are the ones that I'm paying attention to. So, it's not something where, am I looking at this trying to avoid certain days of the week to trade? That's not it at all. I just want to know when those big events are coming. Because if I have a news event, for example, at 10 a.m. Eastern, a half hour after the market opens, and it's a red rated release, really not interested in placing trades at 9:55 right? I mean, I don't want to get blindsided by a big news event when I can wait 5 or 10 minutes, wait for that news event to come out, and then place my order. Just it's useful information there to try to time those entries. So that's something that I will use on a regular basis. And then going into earnings season, earningswhispers.com is a site that I will use quite often just to look up earnings dates. I'm not looking for previews of the earnings numbers. I'm not looking at, what analysts are expecting. All I'm interested in is when are those earnings numbers released. If I type in the ticker box up at the top of that homepage, if I type in Apple, you will see that Apple has earnings out on October 29th at 4:30 Eastern time after the market closes. If I go to Facebook, October 29th, after the market closes. If I go to Amazon, October 29th, after the market closes. So it's very useful. And I recommend that you go through on each individual stock on your watch list and jot down when are those earnings numbers coming out. You can see here, October 29th, a huge day. A lot of the big tech heavy hitters are going to be releasing their earnings after the close. And you want to be aware of that, right? Maybe hold off on initiating any new trades, a couple days before all those earnings come out, and just wait for the 30th, right? And wait for those earnings to be released and then jump back on board. There's a lot of big potential risk there Thursday into Friday next week. So that's something that we'll talk about more going into next week. Another tool that you can use if you're using Thinkorswim, on my watch list on the left-hand side, you will notice that there's a lot of red and blue icons next to those symbols. If I click on any one of those icons, you will see, I clicked on Apple, for example, you will see that the earnings are out on the 29th of October after the close. So that's another way that you can look up those earnings dates. So highly recommend that you go through that process here, especially with the tech sector, because it's going to be ultra active here over the next few weeks. And we don't want to get blindsided by those big earnings numbers. All right. So had some questions on those tools. So I thought I'd cover them again and just review how I use those on a weekly basis. Let's shift over to the technical side of things. Let's talk about price action. And let's start out with a daily chart of SPY, which we usually do here. It's been a quiet start here to the week overall. A lot of wait and see going on. A lot of wait and see from people expecting news with a stimulus plan over the next few days. To be honest, I'm very skeptical of whether anything meaningful is going to be announced before the elections in November. If we do get an announcement, okay, you have to expect another run back up towards the all-time highs at 358.75. The high from the last push to the upside back on the 12th, that high is currently sitting right around 354. Those are two levels that we'll want to watch on the upside should we get any type of a stimulus announcement and we get a big market rally. Those are levels that I'm watching on the upside. On the downside, you can see Monday's low came right on top of that 20-period exponential moving average, and it held as support, which, as expected, I mean, you can track those levels. They are oftentimes areas of support and resistance in both directions. So we found support there in the last 2 days, just kind of been quiet price action hovering right on top of that level. Should that level break, there are some other key areas of support just below us. We've got both the 20 and the 50-period simple moving averages, which are down right around 340-ish. So those are levels that we'll want to watch on the downside. We've talked recently about the coiled spring pattern. And what we're talking about there is on these names like SPY or some of the tech names that don't tend to stay quiet for very long. When they start to get into those sideways stretches, it's like a spring that gets coiled tighter and tighter. At some point, that spring is going to pop. Same goes for SPY or for Apple. When you get those sideways patterns, at some point, you're going to get a breakout move, and it's going to be a powerful move. I think we're in one of those stretches now where, we're just kind of pausing. SPY is building energy here. And when this thing breaks, I think there's going to be a very decent sized tradable move for us. We don't know whether it's going to be to the upside or to the downside. No one knows, right? We'll just have to wait for price action to confirm. So what would confirm that move? Well, if we can get back up above the 347 level, could certainly see that take off to the upside. On the downside, again, if we break this 20 EMA, that could also lead to a nice tradable move to the downside. So those are levels that we're looking at here for the next couple of days. The volume continues to struggle. We've had a couple of days here recently where we did get up above 70 million shares, but for the most part, it's been a struggle to get over 50 or 60 million shares. I mentioned here the last few weeks, I want to see that number over 100 million shares. That would give me more conviction behind the move. So far, we've just seen a lot of low volume movement back and forth. Want to see volume pick up. I also pointed out last week about how this ATR, or the average true range, notice how that continues to contract. It's still at a good number historically. We're still at right around 5.40. That's still pretty good intraday range, but it's definitely contracting here. And I want to see that reverse. I want to see the good activity pick back up. We talked here just a few moments ago. The catalysts are there for that movement. So we'll see if those catalysts pick things up here on the volume side and the range side going into November. The internals here today, very mixed market so far today. Volume ratios, very, very mixed, right around the flat line. So no conviction either way as far as volume goes today. The advanced decline line on the NASDAQ, minus 705 currently. So we do have more names to the downside than the upside on the NASDAQ. However, we still have the NASDAQ futures slightly higher. And that's just due to a couple of the big tech stocks. You know, you've got Facebook up $13. You've got Google up 44. You know, those are pretty big names in the NASDAQ. And that's definitely propping things up, preventing any type of significant damage from being done. Over on the NYSE, or the New York Stock Exchange, minus 686. Again, we still have more names to the downside than the upside, but we're not at that minus 1,000 level. That's typically the number that I'm looking at. If we're truly getting a trending day to the downside, we'd have those advanced decline numbers at minus 1,000 at a minimum. We're not anywhere close to that at the moment. So this is not broad-based selling. We're not seeing broad-based buying in the NASDAQ either. It's a very, very mixed market. And again, just that low volume, wait and see market, given everything going on with the stimulus negotiations. Over on the tick, we haven't had any type of big buy or sell program yet. No plus 1,000 tick readings on the upside, no minus 1,000 tick readings on the downside. And again, all that indicates to us is how many stocks are trading on an uptick versus how many stocks are trading on a downtick at that very moment in time. If we can get a plus 1,000 tick reading, for example, that indicates there's a pretty decent sized buy program kicking, hitting many areas of the market. And that's got more staying power rather than a brief rally led by a couple of big tech stocks. So I want to see ideally clusters of either plus 1,000 tick readings or minus 1,000 tick readings. So we haven't had any of those so far today. And you can see the noisy market that we've had on the 5-minute chart. Had a nice wave to the upside right after the open, the first 30 minutes, followed by a nice move to the downside late morning. And then since then, it's just been a choppy, sloppy mess. Very news driven. We've had some headlines hit due to the stimulus negotiations. And but really kind of in no man's land at the moment until we start to get more of an official release of the stimulus. I think we're going to get more chop to kick in. So again, just not a market that you want to get ultra aggressive with. Definitely think it's a market that you want to be a little bit more conservative here in the near term. Let's go over to the 195-minute charts. These are the charts that we're actually basing our entry and exits off of. And let's start out with SPY. So let's shorten the time frame from the daily to the 195-minute. We've talked here the last couple of weeks about how we have been cautiously bullish on this market. Price action had this nice wave to the upside. Long trade worked out really, really nicely. Since then, we've had this pullback off of that high. And now we're stuck pinned between these moving averages here. That red and blue moving average up just above price action. That's the 8-period exponential moving average. And then the white and yellow line right here, that is the 50-period exponential moving average. And price action has been pinned between those levels now for the last couple of days. If we can get one of those levels to break, again, like I mentioned a few moments ago, there's a very tradable move out of this pattern. Our trend strength indicator down at the bottom just flipped over the 0 line to the downside, indicating we are seeing bearish momentum taking over here. Definitely looking for a short entry point here. If we can break the 50 EMA, right now that level is currently sitting at 341.50. If we can break that level, I would be interested in initiating some new bearish positions, potentially with either some long puts or even selling a call spread. Okay, I'd be more interested in buying long puts at this point. But either way, as long as you have a bearish position on, definitely would be interested at that point. I don't want to jump the gun. I'm not interested in getting into a trade now because price action hasn't confirmed. I want to see us break that 50 EMA first. So below that level, definitely interested in a bearish position. If I go over to the trade page here, let's talk about what expiration cycles we want to use. I continue to get a lot of questions from traders that are selecting their expiration cycles and they're selecting their strike prices solely based off of what they think they can afford. Okay, and the difficult part about that, in many cases, that has people going to the weekly options and the cheap out of the money options. So if you go out, you open up the options that expire on Friday, and let's say you wanted to take a look at a cheap out of the money put, and you go to, let's just say you go into the 335 put. Okay, they're only trading for 43 cents, $43 per contract, which is attractive, right? If you've got a smaller account size, yeah, you can get in for 40 bucks, put on a bearish bet. The problem there is that option has an 88% chance of closing out of the money. Those options are cheap for a reason. I am not opposed to taking some cheap bets from time to time, but you want to do it within reason. If you're going to trade the out of the money options, I would rather have you go maybe 2 or 3 strikes out of the money, but don't go way out of the money like this because you're just stacking the deck against you, right? Nothing in life is free, right? You get what you pay for. In this case, if you buy a 335 put, that's fine, but that's a very low probability bet at a big move higher. A big move lower. If we get that big move lower, yeah, you can make some decent return on those options. You just have to know that there's a very low probability of that happening. I would rather have you, go towards the in the money options, try to get maybe 1 or 2 strikes in the money, even though now you go from $40 to just under $300, you're getting a higher quality option. If you're looking to reduce cost, that's where the vertical spreads come into play. Okay, trading a vertical spread is going to lower the costs on the trade. Yes, it's going to limit your profit potential, but you're going to be in a much better situation, a much higher probability of success trading a vertical spread than just buying a cheap out of the money weekly option. What I have been doing lately, been trading a lot of the November monthly options with 30 days left. Now, if I go out 30 days, yes, they are definitely going to be more expensive. Okay, you're going out 30 days instead of 2 days. So yeah, you're going to pay more for those options, but you're getting a higher quality position. You're getting into a trade that you can hold on longer just in case you don't get that big directional move in your favor immediately. Maybe it takes a little bit more time to develop. Going out 30 days will help limit the time aspect, limit the time decay on those options. So if we break that 50 EMA, I am interested in trading the November monthlies here. I'm pretty much trading the November monthlies across the board on any stock or ETF. If we're looking at a long call or long put, I'm focused on the November monthlies here. The sweet spot for me is typically looking for between 20 and 40 days left expiration. That's why I highly recommend that you start as you get more experience with options or experience with specific names on your watch list. I don't have a problem trading some of those weeklies. They're going to be more aggressive. You just have to have more go right in your favor in order to make money with those weeklies. I trade a lot of weekly options, but I tend to do so more so with the vertical spreads, specifically with the credit spreads. Right? So again, if we get that break lower, I would definitely be looking at some long puts in the November monthly cycle. QQQ. A lot of these index products, we talked last week about how SPY, for example, has been in a long trade. It wasn't the time last week to initiate a new long trade, but if you were already long, I didn't have a problem remaining long. And I'm still that way on any of these index products. If you're already in a long position here on QQQ, I mean, you can see this long trade. It's where our blue plus signs are right here. We've talked about this the last few times that we connected for our updates here. The system has been in a long trade, and that trade initially triggered in back at the end of September. We have been cautiously bullish since then, and I don't have a problem remaining bullish until the stop is hit. The stop is right down at 280.47, but we also have a new short trade setting up as well, just like SPY. If that short trade triggers in on either SPY or QQQ, then yes, I would take those long positions off. Now is not the time, in my opinion, to initiate new long trades. Okay, you're going to want to wait. At this point, you're going to want to wait for a deeper pullback, in my opinion. right? So on QQQ, again, very similar pattern to SPY. If we can break that 50 EMA, which is currently sitting at 282.51, would definitely be interested at a new bearish position. Keep in mind, we do have a very active next couple of weeks with earnings on the tech stocks that we track. I don't like to hold earnings positions through on Apple or Amazon or Facebook. Not really interested in taking positions through earnings on those individual stocks, but an ETF like QQQ, because it's tracking a basket of stocks, I don't have a problem holding positions through. So if we do get a setup on the downside, if that level does break to the downside, I would still put a position on. So that's what I'm looking at here on QQQ. IWM, which is the Russell 2000 ETF. We have had this stretch where, we've got this inverse relationship between the NASDAQ and the Russell. The NASDAQ is strong, the Russell is weak, and vice versa. We continue to see that. The Russell has rolled over after seeing this wave to the upside back end of September, early October, gave us a really nice tradable move to the upside. We are starting to see some weakness kick back in. And IWM, the trend strength indicator down at the bottom, has flipped below the zero line, indicating bearish momentum taking over. And you can see our plus signs, our blue plus signs. We do have a short entry point, a brand new one, with an entry at sorry, I got to get the correct level here. We are looking at 159.14 as our entry point on the downside. If that level hits, I would definitely be interested in some long puts out in November. And let's just take a closer look at that. Let me jot down that entry at 159. 159.14. And let's jump over to the trade page and let me walk you through how we would select the strike price. So we'll switch it from SPY to IWM. I am still going to stick with the November monthly options with 30 days left. And if we do hit the 159.14 entry point, I want to get slightly in the money. Ideally, I would like to get 1 to 2 strikes in the money. At that point, if we hit 159.14, the 159 puts are going to be the at the money puts. That's the closest strike price that I can get to the entry price on the chart. If I go 2 strikes in the money, I can go up to the 160 puts. Now, a couple things that I really like about this option. Notice the volume and open interest. The volume, 4,500 contracts have traded today. There's been 27,000 contracts opened since this option started trading. We've got 27,000 contracts of open interest. So you've got very good liquidity, pretty tight markets, few pennies wide. So I like the 160 put. That's going to be the put option that I go with if this trade does trigger in over the next 24 to 48 hours. Now you are talking around $600 per contract. Okay, they're a little bit pricey right now because we're going off 30 days. But that's going to be the put option that I go with. Keep in mind, if you're a little bit concerned with saying, hey, I don't know if I want to have, $600 tied up in one put option. Keep in mind, you can only lose the entire $600 if you hold all the way to expiration. You can certainly use a tighter stop if you wanted to use a 50% stop. In reality, if you use a 50% stop, you only have $300 of risk on the trade. So you're getting a higher quality position by going out to the monthly options and by going slightly in the money. You're going to start to stack some odds in your favor. Going to be a much better choice rather than just going with the cheap out of the money weekly options. Again, if you're going to take those cheap options, that's fine. Okay, just keep the risk small and just know that there's just going to be a lower probability of success on that trade. Right? So that's IWM. Let's talk about some of the other ETFs on our list. TLT. We just closed out of a position on TLT today. Grab my position sheets here so I can give you the exact numbers. So we had put on a long put position towards the end of last week, Friday of last week. Our trend strength indicator had flipped from bullish to bearish mode. We did get this short entry point right here. And what we did is we came in and we bought the November 20 161 puts, and we paid $2.74. So $274 per contract. Very reasonable on the cost side. That's the nice part about the ETFs. I love to trade them because they are a little bit more realistic for retail traders as far as cost goes. We ended up closing out of the position here today for $4.40. It gave us $166 of profit on the trade. So around a 60% return on our capital. A little bit small. I typically shoot for 100% returns. That's where I always start out with my long option positions. Like I mentioned earlier, I'm trying to temper my expectations. And with this market so focused on the news and it can flip in a heartbeat, I'm trying to rein things in a little bit. I would love to go for the 100% returns, but I know in this market, you can have the most beautiful chart pattern in the world. I mean, everything looked phenomenal here today on the downside. It was working great, but all it takes is one headline and this thing reverses back to the upside. And you go from a profitable to a break even or even a small losing trade. I don't want that to happen. I want to take the profit while I can. In a 60% return on capital in less than a week, yeah, we'll absolutely take that. And once we start to work through the stimulus deal and the elections here in November, as we start to work past some of these big news events, then sure, we can start to go for some of the bigger winners and we can start to get back to more of a normal approach for us. But right now, definitely looking for some of those smaller winners, to take what the market's giving us. So at this point, we are oversold on TLT. How do I know that? Well, the other histogram up towards the top, this is what we call our pulse histogram. And you can see that the last 4 bars have plotted yellow. What that means is price action is hit between a 1 and a 2 standard deviation channel move on the downside. It does not mean TLT can't move lower. It just means it's not statistically probable. We're at a level now when you start to see those yellow bars plot, it typically will either lead to a period of consolidation or a reversal in the other direction. If I go back to the last time we had yellow bars on the downside, see what price action did when those yellow bars started to plot? We hit a support level, started to see chop, and then we reversed back to the upside. Okay, what happened in the last time before that? We had one yellow bar print here, and it was right before price action reversed higher. What happened on the upside? When we had yellow and green bars plot on the upside, that indicated an overbought condition. And look what happened to price as soon as we started to see those yellow bars plot. We saw one last push to the upside, started to see some choppiness kick in, and then a reversal to the downside. So when we start to hit those extremes, again, doesn't mean that price action has to turn on a dime. It's just those are levels that I want to be aware of. Okay, we could definitely be hitting a near-term low here on TLT where we start to see a reversal back to the upside, or at the very least, some chop kick in because of that pulse indicator plotting yellow. So I haven't done anything new here today. All I did is take the position off for a profit from last Friday. And now I'm the potential is there to put on more of a neutral to bullish position. And what that would look like is for me to potentially come in and selling an out of the money put spread. I haven't done anything yet. We'll talk about that one potentially on Friday as we come back in for our weekly recap. But at the moment, we're flat looking for a potential new trade over the next few days. GLD, we've had a nice move higher here on gold. Definitely seeing the metals react to all of the stimulus news. We put on a long call position on gold here yesterday. So our trend strength indicator went from red to blue, indicating bullish momentum taking over. We also saw price action move up above our moving averages up top, both the 8 and the 50 EMAs. And we came in and we bought the 180 calls. Let's go ahead and take a look at the position here. We bought the 180 calls in the November monthly options. These are right here. We paid $3.75 for those contracts that are now trading for around $4.60. So we've got a nice profit on the trade so far. Definitely looking for further follow through. We're definitely holding the position yet. Looking to, if we can get a stimulus deal announced, at least every time that we've seen this happen in the past, we start to see these headlines pick up. These metals have seen nice rallies. So we'll see if that plays out again. Gold having a nice day up just under 1% on the session. So not interested at this point, depending on what happens this afternoon. I wouldn't want to add to a position here now. I'd wait for a pullback to the downside first. And I'm definitely looking for a further wave to the upside out of this sideways pattern. Notice coiled spring pattern, sideways move on gold. Anytime that we have seen a sideways pattern on gold, we have seen a nice breakout move out of the chop. So is today the start of one of those next waves to the upside? We'll see. We'll just see what happens over the next couple of days. Let's talk through some of the financials. So another area where I haven't done anything yet, but the financials have certainly seen some movement. And XLF is one of those names that, I don't trade all the time. It's the financial ETF. But I could certainly see a stretch where, the tech stocks, they've been super strong for a good part of this year. The financials have been lagging behind in many cases. I could certainly see a situation where we start to see some rotation into the financials. Yes, I realize that interest rates are at all-time lows. Not a good thing for banks. But I definitely expect some leadership out of the financials here, potentially over the next week or two. So XLF, what I'd want to see happen if we get a long setup, it's going to come because the trend strength indicator flips back above the zero line. We've just been straddling the zero line for the last week or so, looking for some follow through to the upside. It's currently sitting red. So if we do break the 50 EMA, I'd be looking for a new short position, but I definitely want to get some bullish exposure in the financials here as soon as possible. Some of the individual stocks there, I love trading JPM and JP Morgan. It's actually been one of the financials that has hung in there. So the system's currently in a long setup, firmly above the 50 EMA. So not looking to initiate any new long trades there on JP Morgan, but if we're already in a long setup, I would continue to hold there. Bank of America, BAC, and all these financials have had their earnings released already, so which is nice. So Bank of America is actually in a short trade. Slightly underwater here. The entry point was at 23.76. That one triggered in back on the 14th of October. So in a short position there, and don't be alarmed if you're in a situation where, maybe you've got a long setup on JP Morgan and a short setup on Bank of America. That doesn't bother me. Yeah, there's a good chance that one of those trades is going to win and one's going to lose. That does not bother me because I want the diversification. I want to respect price action. And JP Morgan's been super strong. Bank of America has been weak. So ultimately, we don't know which side is going to win out. Are we moving higher or lower? We just don't know. So I don't have a problem having both of those positions on. So the financials are another area that we'll potentially be looking at over the next few days. So if you have any questions on any markets that I've talked about here today, let me know. A couple other names that I'm looking at, and we'll talk about these later in the week too. I don't want to go too much longer. I want to keep this right around 30 minutes or so. Peloton, symbol PTON, starting to see price action roll over. We've got some short call spreads on the table, which is definitely a good thing to see this price action roll over. Definitely a good thing for the short call spreads. Wouldn't be opposed to adding some new call spreads here, some short call spreads. When you sell a call spread, you're looking at a neutral to bearish position. Definitely due for some pauses here on some of these overdone stocks. Not saying Peloton's going to fall apart. We're just due for a pause. We're due for a healthy pause or even a pullback. So that's another one on my list for the next couple of days. And finally, ADSK, Autodesk, very overbought here as well. You can see the pulse indicator plotting yellow, green, and blue. So what that indicates is price action is above a 2 standard deviation channel move on the upside. We're very overbought. Notice what's happened since we started to get those yellow, green, and blue bars here. Price action stalled out. We started to roll over here, right? We just broke here today the 8 EMA, that blue and red line. So I'd love to see either a period of consolidation or some further selling. Autodesk is also on my radar for selling a call spread here over the next few days. All right. So we'll see what happens. Again, everything that we've talked about from a technical perspective it holds true. It's definitely what we're looking at. But again, the curveball here is what happens with the stimulus negotiations. So the next couple of days are going to be very important. See what headlines hit, see what the market does. And we'll be back on Friday to wrap up the week. We'll talk about some of these markets again, review what's happened between now and Friday, and also take a look at some new trends for next week. So if you have any questions on anything we've covered today, feel free to type those questions in now. Or if you're watching the recording, feel free to post a comment on the video or email me directly. Mike@netpicks.com is my email address. I'd love to connect and talk through any questions you might have. So I'm going to wrap this session up for today. Enjoy your afternoon, everybody. And I will talk to you all on Friday as we wrap up the week.